Welcome everybody to the 40 Finance channel, and today I'm going to take 4 of the most popular ETFs and we're going to look at it over the past year from the vantage point of owning 10 shares. The goal here is just to see which ETFs perform the best and why, and how much you would have made to see in your investment. If you like stock market analysis, personal finance tips, and everything under the money tree, make sure you subscribe to the channel. And please like this video if you enjoy the content. All right, so jumping right in here, I took etfdb.com, which is etfdatabase.com, and I went to grab my 4 ETFs, plus I'm gonna add a editor's pick here of my own. And in order to not sort of copy some of the same strategies, I poked around a little bit. So we're gonna take the SPY, which is the S&P 500 ETF. We're going to take the VTI, which is Vanguard Total Stock Market Index, the QQQ, which is basically the NASDAQ Top 100, and then my favorite ETF is the FDN, which is the Dow Jones Internet Index. So I was already doing this research anyway because I'm such a big proponent of the FDN, so I thought I'd make it into a video and compare it against 3 of the more popular index ETFs available. Okay, so first up on the comparison is the very popular SPY, which is essentially the S&P 500 in an index fund. You'll often see this recommended by a lot of financial professionals for a phenomenal long-term hands-off strategy. Looking at the last 12 months of the SPY, it started this time last year at $265. Through the roller coaster that was the Donald Trump stock market, it is now at $287. 52-week range of $233 to $293. So that means you could have made as much, sold it for as much as $293 if you got out at the very peak, which was likely right before October. And then of course the stock market crash on Christmas Eve brought it down to $233. At the end of the 12 months, we have plus 8% on the price, so it added $22 to the price from $265 to $287. If you had 10 shares, so basically if you invested, somewhere around $2,800, you would have made $220 off your investment, plus this is one ETF that has a dividend. You can see on the Yahoo profile, the yield is 1.85%. That's basically a conglomerate of all different kinds of dividends that this ETF pays out. But long story short, I'm going to estimate it at $53 for the year if you had 10 shares. So you would have been up total $273 on a $2,800 or so investment, and you would have brought you out to about a 9.5% gain. Now, depending on when you bought this, really affects obviously the starting price. I did all the calculations from the ending price just to give a basic idea. But long story short, where it stands today, pretty good investment for the 12-month turn, give or take 9.5 to 10% gain, which of course beats the famous average that everyone talks about, which is the 8% that the stock market has paid off. So a nice solid year for the SPY. Next up, we're talking about another very popular ETF, the VTI, which is Vanguard Total Stock Market Index Fund. This is global stock market, so a little bit different than the S&P 500. This ETF makes a pretty good long-term investment for younger folks, let's just say under 40 years old or 35 years old, where you're just, you want to be in the stock market, but you have other plans for your money. Maybe you're doing real estate, maybe you're doing other things like that, but you definitely want to balance out your portfolio. You just continue to buy shares of VTI slowly over time, and you have a piece of the global stock market wins. Last 12 months of the VTI, it started at 136 and ended at 147.02. Similar to the SPY, it has a yield. This one is 1.94%. And the 52-week range was $119 to $151.84. So if you got out in October, you captured $151. But where it stands now at $147, you're not too far off the high. So that's pretty good. At the end of the day, a 1-year percentage increase on the stock price of 7.6%. That would have earned you about $10 over the year, but you also have to factor in the yield. So if you had 10 shares that grew 7.6%, that got you $100. Then you had my approximation of another $28.50 in dividends, brought you out to a total gain of 8.7%. So that's probably just on the low bar of the estimate, depending on when you were buying, because it takes today's price. So we'll round it up to an even 9%. And once again, just like the SPY, you beat the so-called average stock market gain of 8% over the last, decades. So good job with this one, and probably a very safe bet going forward. Next up, we have the Invesco QQQ Trust. This is the equivalent of the NASDAQ Top 100. This has been a very popular play in the last 10 years with the bull run. It has performed extremely well over the last decade. And quite honestly, the NASDAQ in general, the popularity has increased as technology has increased, and I really don't see it reversing those kind of fortunes anytime soon. But when we look at it from a 12-month standpoint, the QQQ started off at 161.37. It ended its 12-month run here today at 184.48. And it had a 52-week range of 143 all the way up to 187.53. Similar to the VTI, the 52-week high of 187, you're actually pretty close to that today at 184.48. So at the end of the day, the gain for the year was $23 or plus 14%. There is no yield or dividend with this particular ETF. And you can simply multiply your $23 gains by the 10 shares we're pretending to have here, and you're up $230 for the year. Since we don't have to work in the dividend calculations, it's just a net 14% gain. So number one so far on our list. And lastly, here on our list is my favorite ETF, and pretty much the whole reason that I ran this research in the first place, is the FDN First Trust Dow Jones Internet Index. It was a bit of a roller coaster ride as an owner of the FDN, but none of that really had much to do with the FDN as much as it had to do with the Trump stock market and China fears and all those things. So over the last 12 months, it started at 121.64 and it finished here today at 142.60. The 52-week range you see over here is 107 was the low. Once again, that was in the Christmas Eve time when the stock market crashed. And the high of 147.73 was back in October. So all these ETFs are following the same roller coaster pattern. It's just when the highs for some are higher. When we look at the FDN as a whole for the last 12 months, it had a 1-year return of 17% or $21 a share. If you own 10 shares of this ETF, you would have finished with about $210. So definitely the number one performer out of the four here. There's other ETFs that I've covered before in another video that did better than the FDN. I look at the FDN personally as a representation of the companies that I'm interested in. It just has a really good mix of technology companies and consumer companies, which is where my focus is, so it fits with me very well. FDN has done very well over the last 10 years, but there is, as a cautionary tale, we know this bull market is going to end at some time. What happens to tech companies? I personally don't see non-tech S&P 500 companies beating tech S&P 500 companies over, let's just say, the next 25 years. I could be wrong, but there is a little bit of risk here because you're sort of compounded into the internet consumer industry. Okay, the last chart for the day, and this is a big squiggly line, is the last 12 months of all these ETFs represented on a graph that I did on the NASDAQ website. So the blue is the SPY, which is other, S&P 500. You see purple here is the VTI, which pretty much followed the S&P 500, plus or minus a couple points there throughout the year. The QQQ, which is the NASDAQ Top 100, is the orange line, and you see how it handily beat the S&P 500 all the way throughout the year. And then the FDN, to my delight, outperformed them all, at least for this last 12 months. And you see here that it beat them all pretty much by a decent margin at 17% for the year. And just to follow up at the end here, we had FDN with the 17% return, we had QQQ with the 14%, and then 8% on the price for VTI and SPY, but there was some dividends in there as well that brought them to around 9 or 10% total for the year. All right, so I hope you guys enjoyed this comparison. Let me know in the comments what your favorite ETFs are, and I look forward to seeing you on the next video.